Ladies and gentlemen, let's all welcome Oliver.
So, by way of introduction, my name is Oliver Nicol, and I'm Director of Research at APIP. APIP is one of the larger real estate groups in Mongolia. We have interests in cement production, construction, investment, development, consumer finance, and estate agency. And it's a business that's been on the go for around 16 years. We've completed 6 developments in Ulaanbaatar, and we own one of the largest land banks in the city. So today, I thought it might be helpful if I gave you a brief overview of the macroeconomy in Mongolia, and then look to real estate-specific opportunities. It's no secret that Mongolia's had a difficult few years. Exceptional growth in 2012, exceeding 17%, placed Mongolia as the second fastest growing economy in the world, behind only South Sudan. At the time, optimistic commentators coined the term Ulaanbaatar to allude to the small population but massive mineral endowment of the country. Since then, unfavorable commodity pricing combined with attendant political issues led to a slowdown, which culminated in an IMF package that was agreed in February of this year. This package, worth about $5.5 billion, involved support of Japan, South Korea, the restructuring of Chinese debt, and since then, happily, the markets have responded positively and commodity prices have returned to growth, which is delivering dividends for Mongolia. So the 4 economic areas I wanted to talk to you about are firstly this change in commodity pricing. Mongolia is a major exporter of coal, and in January and February of this year alone, there was a 689% increase in the export value of this commodity. But there are also now strong fundamentals for both copper and gold. Secondly, we've seen a 34.7% increase in industrial output in the first half of 2017 relative to 2016. We're seeing meaningful moves to diversification in solar and wind, Kashmir, the development of the uranium industry. And what this is doing is now international organizations are recognizing again the growth potential of the country. Only last week, the IMF reported that it was rapidly recovering ahead of its own expectations and would deliver 8% growth in the coming years. In context, had this been delivered last year, that would have placed Mongolia as the 6th fastest growing economy in the world. So if we first look to coal, it's marked an extraordinary turnaround this year. In the 3 quarters so far, there's been a 59% increase in the volume of Mongolian coal exported, but this has represented a 269% increase in overall value. Now, whatever your view about the long-term contribution coal can make to an economy, it's indubitably the case that Mongolia is benefiting from increased demand, particularly from China. This has been brought about by the closure of literally hundreds of mines in that country for environmental restrictions, the ban on imports from North Korea. And so Mongolian coal exporters are gearing up to operate at full capacity from next year to beat an already extraordinary year where there's been a 4-fold increase in exports south. The image you can see on screen is what we believe to be one of the largest traffic jams in the world at the Mongolian-Chinese border, where literally hundreds of trucks are trying to export this commodity south. But whilst coal is interesting, economy cannot be built upon this alone. And what's gratifying is we've also seen a 40% increase in overall Mongolian exports this year. And a crucial problem that the IMF identified was a trade deficit. We've now seen Mongolia's surplus this year increase by 69%. The gold industry is developing fast, though still in its infancy. But crucially, copper is what many people hope will deliver Mongolia's long-term affluence and prosperity. Now, we'll look a bit later at one very large project known as Oyu Tolgoi. However, at the moment, we're also seeing some very positive further signals. Only a couple of months ago, the International Copper Association released a report suggesting there would be a 9-fold increase in global copper demand by 2027. Mongolia has the 13th largest copper reserves in the world, and so as we move to electrification of vehicles and as we attempt to harness new technologies, Mongolia can expect to benefit. And a great illustration of this is currently the largest copper producer in the world is Chile, and the largest company engaged in extraction of copper in the world is a Chilean state-owned entity called Codelco. They, for the first time in their history, are now expanding out of Latin America and investing in Mongolia. Now, I alluded briefly there to the Oyu Tolgoi mine. This is a partnership between the Mongolian government and Rio Tinto, the British-Australian mining giant. Now, when complete and operational, it's estimated this could deliver as much as 30% of Mongolian GDP. But at the moment, if we just look at the fact that there was a political impasse before which frustrated the progress of the project, now this has been resolved and there is approved capital expenditure on the project which will reach higher grades of copper, which will deliver further growth for Mongolia. $2.4 billion has been approved in investment in the period between 2018 and 2019. In an economy of 11.016 billion last year, you can see the effect of this could be seismic. But we've also seen, not simply in the area of copper, major copper projects or major coal exports, further industrial output and diversification. There was a 44.2% increase in Mongolian exports to China this year alone. There have been a flurry of announcements from junior and senior miners and also people across other sectors. From Xanadu Mines, Konkora, Petrometad, even Cairn Energy, we're seeing that Mongolia, people are trying to tap into between 1.2 and $2.5 trillion of mineral wealth that's believed to lay under the ground. Up until March of this year, only 10% of the Mongolian landmass was allowed for exploration. The government has now doubled this to 20%, and many people are rightfully hoping to cash in. Now, if you speak to many international organizations, they will stress that given Mongolia's recent difficulties, the most important thing is the repair of the public finances, fiscal, financial, and economic reforms designed to make sure Mongolia is on a more stable footing for the future. But it's inescapable that if it is to be sustainable, it needs meaningful diversification also. And what we've seen this year is a series of announcements that point in this direction. The IMF wishes for Mongolia to sustain 8% rates of growth annually in line with emerging Asia. And to do this, we've now seen a 55 megawatt wind farm announced in Saishan province. We've seen major infrastructure investments, such as a massive arterial road between Ulaanbaatar and Dahan. We've heard engagement in the One Belt and One Road initiative that we spoke of earlier today. Not to mention movements towards, for example, being involved in the uranium industry. Narendra Modi has said that he wishes to increase Indian generation of nuclear power to 63,000 megawatts in the next few years, and Mongolia has the 12th largest reserves of uranium in the world. So these factors that I've identified in earlier slides are now translating into meaningful estimations of growth. Mongolia grew 5.3% in the first half of 2017. The stock market is at highs not seen since 2012, when the economy grew at a rate of 12.3%. The overall value of those shares is up 45% year on year. And we've seen international organizations recalibrate their forecasts. The APIP initially predicted 2.5% growth this year, and it's now upped it to 4%. The IMF, as I say, has also now revised its expectations, conceding that they were a little on the conservative side. So, for a real estate conference, what does this actually mean? I often say that we as a company would be naive if we thought we could build a business purely on expatriate workers or on international capital. Mongolia is, after all, a country of 3 million people on a landmass the size of Western Europe. So we rely on the fundamentals in the economy, and there is an inexorable trend of urbanization that's been going for some years now. Climate change has meant that we've had particularly harsh winters known as zuds, which has meant that the normal Mongolian pastoral and nomadic way of life has changed, and more of these people now reside in the city. Latest estimations suggest that as much as 26% of Ulaanbaatar's residents reside in tented accommodation known as gers. If you take temporary forms of accommodation also, this may be as much as 40%. So in a move to try and alleviate pollution in winter and to provide basic services to people, the government is pushing hard at the low and middle end of the housing market. A different phenomenon, but one no less interesting, is the return of expatriate workers to Mongolia. I recently wrote a piece for Newsweek about this phenomenon, where we've seen that in the first 3 quarters of this year, there's been 57,000 foreigners who have come to live, work, or study in Mongolia. Many of these people come from large international mining companies with large housing allowances requiring prime units. But if you stand overlooking Ulaanbaatar on what's called the Zaizan Monument, you will see lots of construction, but it's largely stalled construction. Rates of development finance are cripplingly high, and many developments have simply not come to fruition. So as these workers return to the city, they are competing for a relatively small quantum of units, which again is driving yields higher. It's not unusual to see yields of 12% in some of our buildings. And this increase in demand for rents is occurring at a time when the property capital values have bottomed out. The average, we estimate, is around $876 per square meter in the city. Yet, at the same time, demand for rental properties continues to grow. And a further peculiarity that's worth noting in terms of rental demand is, as in many of the emerging economies that we've discussed today, the mortgage market in Mongolia is at best sclerotic and at worst dysfunctional. It basically is non-existent. And so many Mongolians with good salaries, in good jobs, and with good prospects are residing in the rental sector because they cannot access mortgages. So these people, combined with expatriate workers, are also competing for the best units, which is driving strong returns for investors. One last point I would mention is that Mongolia has a particularly conducive investment environment. There's 0% capital gains tax. Most income on rental properties is taxed at a rate of 10%. There is no distinction between foreign and domestic purchasers of property, and foreigners can also own properties outright. This means that it has one of the most favorable environments in Asia by our understanding. But it would be remiss of me and possibly threaten my job if I didn't at least mention some of our own developments. This is the Olympic residence, which is located in Subatar district in Ulaanbaatar, opposite the Shangri-La Hotel, very close to the center of the city. We've more or less sold the entire building now, largely to Mongolian purchasers. It's around 28,000 square meters of residential space, 3 stories of retail space, and is performing very well in the market. And one of the reasons we're in Singapore currently is we're launching our next scheme, known as the Circus Residence. This is located on Seoul Street in the entertainment district of the city, again within 5 minutes of the main offices and retail spaces. Units start from $150,000, and it's aimed squarely at the middle class and the incoming expatriate workers. We believe in this scheme it will be comfortably achievable to reach yields of between 9 and 12%, and to also benefit from the capital appreciation, which is likely to follow and be commensurate to upcoming economic growth. So I hope you can probably see from the following images, and I now need to tie this up, but we've designed it to be best in class using architects from Europe and from elsewhere in Asia with the best interior design, and we believe it will sell very well. So we've now concluded a brief gallop through the real estate sector and the economy in Mongolia. I'm going to be in Singapore for another couple of weeks, as will my colleague Gemma, who is sat at the front here. So if anybody would like to know more about the market or about what we're doing, we'd be delighted to talk to you. Thank you very much.